Nvidia is down 20% in the last month. So is Nvidia a buy, or should we be waiting for Nvidia to drop lower? Well, in this video, I'm going to show you how to value a stock in terms of its buy price, absolutely free, and it's going to take you less than 10 minutes to do. So if you like the sound of that, all I ask for is that you smash that like button and don't forget to subscribe. Now, when it comes to valuing a business, there's many ways you can do it. I like to use an intrinsic value model, which effectively looks at what is the cost if I wanted to buy the overall business today. And based on that, we have a lovely share price. So if we take the current share price times by all the shares outstanding, that will give you the value of the company. So we're going to be utilizing some of these models, and there is a bit of numbers that you need, but I'll show you exactly where to get them from to get a buy price today for any stock. Now, the model we're going to be using is an EPS model, so an earnings per share model, which means that to use it, you have to, well, the business that you're looking at will have to be a profitable business. So Nvidia is a profitable business with the positive EPS, so we can run our calculations through that. And again, we'll be using TradingView, and there is a absolutely free indicator that will help you do it. It will visualize it all on the chart, where the buy price is and where the intrinsic value is. So we're going to be looking at that shortly. But the first thing we need to do as part of this model is understand a few assumptions and metrics. So the first metric that you need to understand is what is the percentage EPS growth per year for the next 5 years for, in our case, Nvidia. So you might be thinking, how on earth am I going to work that one out? Well, fortunately, we can use analyst estimates to help us to get a very high assumption, and then we can work backwards from there. So what you want to do is you want to go to Yahoo Finance, put your ticker symbol in at the top, and then go to the analysis section. In this section, what you'll find is earnings estimates, revenue estimates, past earning history, all these good things. And what we want to do, we want to go right to the bottom and look at growth estimates. And this is looking at, what is the growth estimates for the current year, next year, etc., what they did in the past 5 years, and what we're interested in is what they're going to do in the next 5 years per annum. So we can see here in the last 5 years that they've grown their earnings per share 63.75%, which again is phenomenal based on the current market environment. But we understand that with the AI boom, they are the leaders in AI chip making. We all get it. But what is interesting is analysts predict that over the next 5 years per annum, they're going to grow at just under 50% a year. Now, these analysts are paid to look at Nvidia all day, every day, and they must have put some logic to their madness here. However, they tend to overegg these kind of things. So what I'm looking at doing is taking the 46.35% as my high assumption. So if I go across over to TradingView, and again, you can download the OGT intrinsic value indicator. It's absolutely free. And we're going to look at the settings here. The way that this works, there's 3 sections. There's the EPS, which we just talked about, how much return you want to get, and the PE ratio. So we'll go through all of these in a second, but let's focus on the EPS annual growth rate for the next 5 years. And as we talked about, the analysts predict it's going to be 46.35%. So in all of these, there's our low, medium, high assumption. I always like to put the analyst estimates as the high assumption and then work backwards from there, trying to be more conservative. Now, for the medium, I've gone with 30%. For the low, I've gone with 20%. I really think Nvidia is going to smash 20% growth year over year based on what they've done and what they're thinking. So they're probably going to be somewhere between 20 and the 46.35. But again, the low assumption here is really looking at the base case or your worst case scenario of what you think they can grow their EPS over the next 5 years on an annual basis. And to be fair with Nvidia, it's probably front loaded, whereas they're probably going to achieve higher growth rates in the next 1-2 years, which you can probably see in this one here. Next quarter, 75, 109. And then in year 4 and 5, they're probably going to drop to like 10% or something like that, which gets you to your average of the 46.35. So in a way, that's a good thing that we're expecting to see that front loaded because to take advantage of the AI boom. So that's the first piece that we wanted to look at, the EPS stuff. And again, very easily done in terms of getting that number. Your annual return is basically what we want to understand is how much are you expecting to gain in terms of stock price appreciation per year over the next 5 years. Now, you can invest in the S&P 500 and on average it's 8-9% a year. Because we're investing on a single stock, I want more margin of safety and therefore a higher return. So therefore, I've gone with 15%. The way that this works is the higher the number here, the lower the intrinsic value, i.e. the more the stock would potentially need to drop for it to become a buy price for you. So again, that's how it works. And in this scenario, the lower the number, the lower the intrinsic value, the higher the number, the higher the intrinsic value. So that's kind of how this assumption works. The last piece we need is the PE ratio. So the PE ratio, again, is the price to earnings ratio. So it takes the current price, and multiplies it, or the current EPS, and multiply it by your growth rates. Now, I've put in 40, 50, and 60 here. So let me explain how I get to that. So in this one here, I go to a website called Macro Trends, which I like to use quite a lot in terms of analyzing stocks. So it gives you historic data in terms of, all the financials and all this good stuff, as well as ratios here. So again, you can type in or just Google Macro Trends Nvidia PE ratio in the first link. And you can see here what it does is puts the stock price in there, and then there's the EPS, and then it gives you its PE ratio. Now, again, you can see here through this massive boom in 2020, you had a PE ratio of 144.47. So again, if you think about what the PE ratio impacts to your intrinsic value, the higher the number, the higher the intrinsic value is. Whereas what we're trying to do is trying to buy the stock at the lowest possible price. So we want to put decent enough assumptions, but low PEs to give us a better hope that if it hits our low assumption, that we are playing worst case scenario. So you can see here, it's currently sitting at 61, 50, 53. I'm going to ignore this one here, 57, 59, 40, 78. So again, if we go back to my assumptions I put in, I've put a high of 60 in here. And you can see here where a 60 is, it hasn't got to 60. So in 2022, it was at 50, and 60 was last year back in the 31st of January, 2022. And again, that is my highest assumption, right? You got to remember is that Nvidia had PE ratios of 144. So again, I've gone down by 10 into 50 and 40. So if we look at the last time Nvidia dropped to 40, looking over here. So last time Nvidia dropped around 40 was in 2019, pre the pandemic. So pretty low. And you can see post then, it has been easily above 40 throughout the entirety of back in 2019. So again, very conservative number, especially when I've got a growth rate of 20% and a PE ratio in 5 years of 40. So if I take those calculations and I unhide what that looks like in the next 5 years, and again, you can customize the settings. What I'll do is I'll leave a link in the pinned comment of the full tutorial video of how to use this indicator in terms of how the data is calculated, all this good stuff. But what it's showing me here, really interestingly, is generally what you see is you generally see a stock price above your high, medium, and low assumption. What we're seeing here is based on these very aggressive growth rates, we've got even on the highest assumption. So if we believe that Nvidia will grow, 40 odd percent with a 15% return and a PE ratio of 60, I think it was, the intrinsic value is 268 and we're trading at 105 even as it currently stands. However, if we take back our low assumption, our lowest assumption is a PE ratio of 20, where you can see, or 40, sorry, where you can see the last time it was at 40, again, it was back in 2019. And with the growth rates they're expecting the next couple of years, you're not expecting a PE ratio to drop that low anytime soon. And with the growth rates of 20% EPS from memory, 20% EPS. And again, if we go back to here, next 5 years, this is half of this number, right? Considering they're looking to do current quarter, current year, 109%, where again, we're looking at 20 on average a year over year for the next 5 years. We have a low assumption of $80.96, $81. And if we take the last weekly bar here, we can see the low is at 90.69. So again, we're only $20 away. That is a good 20% away from the current price. But what it starts meaning is that based on where we were in the highs over here of 140, because we've dropped so much by this point, we are getting close in and around that number. So what do you do with this information? So one, again, this is only a guide based on the assumptions that we've done. So again, I strongly recommend that you do some more research and all these kind of good things. But what I would be doing personally, and what I am actively doing, is starting to sell put options around the $80 mark. So because if the stock was at 140 and I was selling puts at $80, I'd be getting like $20 of premium, which for the amount of initial capital I've got outlay to go make $20 for it to eventually get to 80, it's not worth my time or effort in terms of where to put my money. So therefore, in this section, you have to be patient. And now it's dropped to such a number here at 105, where it dropped to 90, selling an $80 put when the stock was at 90. You would have got $200-300 for a monthly put option at $80. And therefore that starts making good headway, because then what happens there is if the stock then does recover or doesn't get to 80, in terms of especially if your margin will probably cost you a couple of grand to put on the put option, you're making $300-400 on a $2,000 initial capital for something you want to get assigned on the stock anyway. So therefore, in terms of your return, even if it doesn't get there, you're making pretty decent percentage return on that potential thing. So even if you did pick the stock up at 80 and in year 5 it gets to 140, which is pretty much the high where it's at now, where it was at, again, you're still making a decent amount of return over the 5 years. But I think because this is front loaded, again, you're probably going to make a decent return in the first 2-3 years. And again, depending on what you want to do, whether you hold it or you sell it, whatever that may be, that's up to you. But what I'm trying to explain here is we are very close to a buy price positioning here for Nvidia, which may seem not far away at 20%. It may not even get to 80, especially recession, all of these things. But again, at least looking at selling put options in and around the $80 mark, again, would be a fantastic price to be getting into Nvidia for. So again, this is purely not financial advice, but this is how I go about looking at this as the first instance to say, okay, let's start selling put options. But again, I probably wouldn't sell put options at 80. I'll probably start selling at 75 or 70, because then you're adding even more conservative margin of safety on this particular stock. In Nvidia, for example, the lower price you get it. And again, I've had it so many times where I've sold a put option, let's say in this example of 80, and then you go to the moon 2 years later and it's sitting at, 140, Apple being a classic example, because even at the price, it just never went anywhere near its intrinsic value price. So again, this is something that I would consider looking at. If you're really interested in more videos, put ticker symbols down below. I can do the analysis videos for you guys and we can have that discussion. So I hope you've enjoyed it, and I shall see you guys in the next video.